Hello, everyone. Greg Michlig here, President and CEO at CUInsight.com. And on this episode of Three Questions, it's a pleasure to welcome Josh DeTar, Executive Vice President of Evangelism at Tyfone. Josh, thanks for being here.
Hey, Greg, thank you so much for giving me the opportunity. I really appreciate it.
Yeah, and I'm sure everyone is eager to hear about all the valuable insights you have to offer. And so, with that, let's get to those three questions.
Sounds good. I hope I can add value.
All right. So, how have advancements in AI impacted the way people interact with software? And how will it impact digital banking specifically?
Yeah, thanks, Greg. Great question. Think about just your own personal interactions with software over the years. And I want to use three very specific examples. The first is, I might be dating myself and some others in this, but, have you used the old school Yahoo directory, right? Back in the day where you had to say, well, I want to, look at whatever automotive, and then I want to look at Chevy, and then I want to look at Chevy trucks. And you had to kind of keep clicking down through the directory. We changed and we said, hey, nobody likes clicking a million times to go through that with the advent of Google. And with the advent of Google, we went in and we just searched, I'm looking for Chevy pickup trucks. And it gave me a bunch of results that contained information about Chevy pickup trucks. But I'd like to ask our listeners, have you interacted with tools like ChatGPT, which is very different, right? Now I go in and I say, tell me why I would be interested in purchasing a Chevy pickup truck over maybe a Ford pickup truck. And then instead of giving me a bunch of articles that may or may not help me, and I have to comb through that, it gives me a very curated response, right? That's kind of the evolution of the user experience expectation that people are going through. Now, how does that apply to digital banking? Well, think about digital banking of the past, right? Digital banking of the past was fairly simple. And so we kind of had a menu and you clicked through and you said, I wanted to see my accounts. Well, which account? Okay, this account, right? Then we started to add a lot more features and functionality, but we haven't even really taken the Google step. We just kept adding more functionality and you had to click through it. And so we try to be really thoughtful about UI design and get people to what they need to with as little navigation as possible. But with advancements in tools like AI, why don't we start thinking more like ChatGPT and less like Yahoo Directory? Why not have people just be able to search and say, I need to know what has happened across these three accounts over the last 6 months. How much money did I spend at this merchant? When is my next bill due? Where do I need to go to accomplish this function? How do I reorder a checkbook? What is APR, right? And give a really curated response. So with advancements in processing capability and kind of the expectation that users have, I think we're going to see a big change in how people expect to interact with their financial institution digitally and how they expect to navigate digital banking.
That's really interesting, and especially the AI piece of that. I mean, it is as you talk through all those examples, it's really poignant. It kind of walks through my history in terms of looking for things online. So, not to date myself, but agreed. Yeah. So, instant payments. What impact does that have on community financial services?
Look, I'm going to insert my personal and hopefully professional opinion on this one. I think it's going to fundamentally change everything, Greg. If you look at the landscape of payments and money movement in the United States as kind of a four quadrant boxes, right? Where on one axis you have speed and on one axis you have cost. We had three of the four buckets covered here in the US. The one we were missing was the best one. It was the fast and cheap quadrant. With instant payments, we now have that fourth bucket. We have fast and cheap. But there's a lot of other things that come out of that in terms of benefits for the financial institution, right? Things like operational efficiency, reduced fraud, all of that good stuff. But I want to really touch on why is this so important and why do I think this is going to fundamentally change our ecosystem so much? It's not so much the impact to the financial institutions, it's the impact to you and I. It's the impact to just US consumers, right? Unfortunately, the data tells us that over 60% of Americans still live paycheck to paycheck. So what does that mean? It means a lot of us are managing cash flow and we're managing it on razor thin margins, right? So the ability to actually maybe get paid with higher frequency, right? Earned wage access. Well, what if it's so cheap and easy and fast for my employer? I literally just get paid at the end of the day every day for what I worked, right? Instead of getting paid every 2 weeks or once a month and having to try and manage that cash flow over that, I can just get paid every day. What if instead of having to queue up a payment to my utility 2 days in advance, what if I can pay it 6 seconds before it's due? Right? And going back to the conversation of AI, we talked about it from just a ability to interact with and navigate software, but what about the ability to provide really thoughtful and intelligent insights like, hey, Greg, we actually see that you're getting paid on a higher frequency. And we see that that money comes in very predictably at this time period. We know it's going to settle then. We also know this bill is due then. Let's start to set up an automated payment that pays this at this time. It'll conserve your cash flow. It'll help you out with making sure that you can buy groceries on Sunday so you're prepped for the week instead of having to wait until you get paid on Wednesday to go buy groceries and you're going hungry Monday and Tuesday, right? Those are the kinds of impacts that I think are going to happen to real people. And that's where you're going to see the big ask from consumers to say, yeah, I want that.
Yeah, that's great stuff, and just hearing kind of where it could potentially go and where it's heading now is really really interesting. I want to pivot a little bit and ask you, why is the heart of a company a credit union chooses to do business with equally as important as its technology?
So I think that that's so incredibly important for a couple of reasons. And I'll start with the one that is, what is a credit union? Right? A credit union is a cooperative financial institution, a not for profit organization. And guess who it's beholden to? Its members. It's not beholden to Wall Street. It's not beholden to shareholders that expect a 200, 300% year over year increase in sales, right? Don't get me wrong. Credit unions need to stay profitable. They need to grow, right? But they're doing it not at the expense of their members. They're doing it for the benefit of their members. That's a major difference. And so, me as a consumer, right? I'm walking down Main Street anywhere USA and I'm looking for a financial institution and I've got big bank insert name here on my left and local credit union over here on my right. Why would I choose to do business over one than the other? Maybe somebody's got a 1/10% on a rate better. Maybe somebody's got a flashier image on their debit card. I think we're splitting hairs on that one, right? At the end of the day, why do consumers choose to bank with credit unions? It's over the relationship, right? It's over the sense that, back to the earlier comment, right? They are looking out for my best interests, not their shareholders' best interests, right? So when a credit union is looking to do business with a company, I think they should use that same lens, right? Why is somebody choosing to do business with me as a credit union? And does that align to why am I choosing to do business with this institution? Like, who are they really and truly serving? And how does that guide their philosophical approach to how they build their business? Because that's going to tie into the type of technology that they build, right? I will argue that absolutely, especially when we're talking about software, right? Any software company worth their weight in salt can build features, right? But not everybody builds relationships. Because if that's not fundamentally important to the core of your organization, then it's not going to be at the forefront of what you do, right? So the question shouldn't be what features do you have? It's why do you have the features that you have? And why did you build them in the way that you did? And if that answer is not because of the relationship I have with my credit unions and understanding what will add real, meaningful benefit and value to them, then you're just check marking boxes. And if we're just check marking boxes, we're fighting chasing Bank of America and Wells on that 1/10% and that flashier debit card image. I don't want to be in that space. I want to be in a place where our credit unions are providing really cool tech that's providing real value because you know your members better than anyone and your vendor knows you better than anyone.
Yeah, that's awesome. And going back to not dating myself, I've been in the industry a few years now, and just that differentiation point on relationship is really important. And the fact that you're tying that into your relationship with credit unions, I think makes a ton of sense and is really good. Thought leadership on that point. We're about to wrap here, and I just wanted to see if you had any final thoughts that you'd like to share with the audience, or any asks of the viewers for today.
Um, First off, I'd just like to thank you, Greg, for giving me this opportunity. I'd like to thank CUInsight for all the amazing work that you do for this industry and how well you curate data and perspectives and cultivate collaboration and information sharing for this industry. You're absolutely one of my favorite resources to go for information, so I appreciate that. Thank you for giving me an opportunity to have a voice. I'm somebody who's really personally passionate about the credit union industry. I'm a 20 plus year credit union member myself. I was personally saved by a credit union. And I now sit on the board of that credit union and I'm the chair of their supervisory committee. So this is not just something that I, punch in and punch out for work. This is an industry that I really believe in. And I think it's going to have profound impacts on the lives of the people around me and the communities around me. And I'm really proud and honored to be a part of that. So I always appreciate the opportunity to be able to share with our industry, talk with folks like you. And as far as just asks of our audience, I love a good, healthy debate. So if you want to challenge me on some of the things that we've talked about, or if you agree and you want to talk more about it, find me on LinkedIn, and I'm always happy to start up a conversation. So thank you, Greg.
Yep, absolutely. That's great. And just hearing your background and your involvement with credit union is awesome. And thank you for the kind words about CU Insight and CUInsight.com. I'm still the new guy here, so I'm going to do my best to move it forward. And stepping into this role has been a great pleasure for me, and as has this interview. So thank you, Josh. It's been a pleasure to connect with you, and I thank you so much for your time today. And a final thank you to all who tuned in to this Three Questions video interview. We'll see you next time.